Rich is asking, how does Fibonacci retracements work? All right, real quick, I'll show you. This is a good time to show you that. Let's delete everything here, clear the drawing set, and we're gonna say, all right, look, you pick a low, okay? I mean, you can do a Fibonacci retracement from down here if you're thinking about a bigger time frame, right? This goes all the way back to November, the end of November, beginning of December. So if we wanted to do, a Fibonacci retracement from here, you're kind of looking at that bigger time frame. Now, I say bigger time frame, it doesn't necessarily mean a larger amount of time, because if you look at the, here's the COVID crash low, right? You can see this. I'm going to look at the 20-year chart here, and the COVID crash low is very clear on the chart, very easy to see. Let's do a maximum if we can. This goes back to 1997. Okay, and you can very clearly see this. This is a long-term move. Even if it happened in a week, it's still a long-term move. Now, with EGY, you might want to wait for a pullback, right? Because I mean, look, there's resistance here. So yeah, it does want to gravitate to that. It does want to go up to 953. Does it want to pull back first? It's a great question, especially as it applies to EGY. But the point is, long term, this is a long-term move. It happened in a short period of time. This is a long-term move. And the reason we call it long-term, the lingo is kind of messed up. We really should say it's a big move. It's a bigger move. We also want to recognize, I'm gonna delete that, and I'm gonna start here, and I'm gonna try to connect some of these lows, something like this. Okay, it's not gonna matter for quite a while, so. Okay, you could leave it like that. Well, this might cause some resistance right around the same level if it were to pop right, very quickly. But once I take this back down to even a 3-year weekly, it's going to be way above there. All right, so when you're thinking about a Fibonacci retracement, you could think about the bigger move, because yeah, it might pull back a little. Well, let me go to a daily chart here. It might pull back a little here and go higher, a lot of little zigzags in here, whatever, and zigzag on the way up and then zigzag on the way down, right? I mean, lots of little trends within bigger trends. So Fibonacci, if you're looking at the big trend, you're going here from December, and you're gonna find the retracement right here, and you're gonna find a major low that you feel seems like a major low and extend it to a major high, which and some people ask, should we use the intraday activity, which is that little stem, that little candle wick that you see there, or the closing price? And you can use either, but what you really should do is try both, and then take a look and see what the market is respecting. What are they respecting? Okay, what are the computers, how are they programmed? So if I go like this, I mean, it's pretty clear. The very standard, very popular 50% retracement, okay? 50% is the most common retracement level, okay? And remember, all this stuff doesn't even matter because it's in the past. If we are connecting this low up to this high has already happened, right? So we have already, this has already happened, all this stuff here. So now we're looking at the 50%, and what happened? It retraced. 50%, very, very common. So it came from here down to here. It's a 50% retracement. But all of these levels, these are all potential retracement levels. Okay, and that's where computers are programmed to go in and buy more stock. All right, so let me erase all these drawings. And interestingly enough, we did this on the fly. I didn't plan this to try to make my Fibonacci thing work. It's like pretty much every single time we do a Fibonacci anything, it works. It's probably the most important indicator to me outside of BPI and relative strength, Fibonacci. Okay, so we looked at this big trend, and the bigger trend, 50% is a retracement, and it's officially, if we get a close today where the stock is or higher, it's officially a 50% retracement. We only know that because the stock broke the previous high. If the stock does not break the previous high, then it's not official yet, because we don't know. I mean, for all we know, the stock could go from here down to here, and then up to here, make a lower high, and then continue lower, and then it retraced down to 61, right? And then move higher. So it might not even be done right here. You know in hindsight whether your 50% retracement was actually, where it happened before the next high. Having said that, it's still very useful, even if it does bounce off this level and come up here. Maybe it could turn out to be a counter trend trade. Now this is an upwards trend. The uptrend is not broken, okay, in this time frame anyway. In this little short-term time frame, yeah, sure, the uptrend was broken. It made a lower low and a lower high in the short term. But that's how Fibonacci retracement works. Now I'm going to clear the entire set here, and try to clear the entire set here. Okay, and we're going to say, okay, well, here's another low. Let's try it from this one. This is the time frame's a little bit smaller, and then we'll do a third one. So here's a Fibonacci retracement, and you'll see this a lot of the time too. When we start the measurement from here and we have a little bit of a shorter term view, look at the retracement, 61.8%, right? Perfect. Okay. And then when you're looking at, this short-term time frame, okay, you're going to start at the low. I'm not being very precise, just going to start at the low. We're going to go like this. And so it retraced 100% of that move, in the short term. So, what that's saying, the fact that it retraced all of that move, that statement, okay, and look at this statement for a moment, independent of everything else, look at it in a vacuum. This statement right here is saying that no, the market's telling you the stock is not ready to do this move that you just saw right here. There's a lot of other things that are saying otherwise, so keep that in mind. I'm bullish on this stock, but maybe it does need to, let momentum, catch up to be more reasonable. If I zoom all the way out here back to that 10-year weekly, this seems like this seems reasonable, right? It could break out. It's being accumulated. That's all we know. It doesn't mean it's going to happen in the time frame that we want it to happen if we just go in and buy it, right? Everybody wants it to happen immediately. But look what happened here, okay? We ran into this long-term resistance, just like we have long-term resistance up here, okay? It happened, ran into it. It had to digest this very sharp move higher, okay? And we saw a big spike in volume here. Here, let me show you a Fibonacci extension. I'm gonna, I'm doing this on the fly. Once again, it's not my, check the inside of my hat, make sure there's no smoke, no mirrors. It's not me trying to make Fibonacci work. I don't know why I would. Maybe that would justify my existence as a technical analyst, right? But here's the Fibonacci extension. We're gonna measure the, the range. Now this is kind of tough because it's slightly higher highs every time. We can measure any one of these. Let's measure all of them. Go like this, okay, and then zoom in here. Okay, we measured this, from here to here, and it doesn't seem to be, with the exception of the 261%, that's potentially a resistance level, but it doesn't seem to. There's not a lot of things that just jump out, at me. We can do the distance between here and this higher high, and look at it and zoom in here, and okay, it's found resistance right there at that 100%. This is the target, is the main target is 100%, 100% and 50% of the main targets. And it got up to 161, kind of found resistance right around there. Looks like it wants to go to at least 773. So based on the Fibonacci extension that we just did, and we kind of looked around and we saw that it's actually, kind of being respected. Based on that, we're saying looks like the stock wants to actually go to 773 before it, before it reverses or pushes through.